Hey, today is May 3rd, first day of the new trading month. I'm going to be going over the one play I took today. It was Netflix calls above. Um, it was a rally-based rally, and it was a decent sized loss. Not going to sugarcoat it, but nothing really happened to my account. Everything is still okay. But I'm going to be going over why I took the trade and why I can avoid this trade in the future. So to understand my trade, you need to go to a 1 hour time frame first, where you can really look at the bigger picture. So Netflix gapped down on bad earnings, and ever since then we found support at 500, and we are playing tug of war with this 514 key resistance area. So I'm gonna remove this just because it's harder to see, but you can see that we come and we test 514 and we reject. Then we come up here, don't hit 514 exactly, but we do reject in this area. Then all of Friday, we're playing tug of war with this 514 key resistance area. We can never get above it. Every time we do, sellers bring us down. So 514 is clearly an area of interest. So my plan was to take calls on a strong break above 514, probably targeting this 520 psychological level, and eventually work our way into the gap. So let's go down to an intraday time frame. Oh, I should probably go to, just so you can see ES and NQ as well. Just to make it easier. Okay, so this is Netflix trade. This is ES at the time, very, very choppy. I'll get into that. This is NQ at the time, a little bit better. So we do pull back in the morning. ES is just very, very choppy. NQ pulls back into 30-minute demand, which is good. NQ does reject 3 hour supply, but it's a very, very weak attempt by sellers. Buyers bring us back up. We form higher lows, which is bullish. So when we first come up to this 514 key level area, I do not take calls here. I do not take calls on a break above 514. And there's two main reasons why. I know Dylan took this trade above 514 and it was a very nice winning trade for him, but I did not take calls above 514. One of the reasons being is look at this volume right here in light green. This is very, very low volume. Even right here, when we start approaching this 514 key level area, this is extremely low volume. Now 514 is a major, major level which we've been having trouble getting over for the last week. So as we approach this level, you want to see increased volume, you want to see increased momentum, and sadly, there was none. So that being one reason. The second reason being that there really wasn't any real period of consolidation before a move above 514. So for those two reasons, I avoided taking calls above 514. In hindsight, it worked very nicely, but according to my rules, I cannot take a trade like this, and I'm completely fine with this. I had no FOMO. It just happens sometimes. For me, there was a high chance of a fake out, so I avoided it. So that was a trade that I didn't miss, but that was a good setup which Dylan took. My trade was actually this 5 minute rally, this green basing candle with a nice lower wick, and a potential rally. So 5 minute RB and R. So I entered here. I waited for 5 minute close. My stop was a 5 minute close above 517, and pretty much that happened. I mean, we closed below 517. I waited for a couple of seconds to see if we could move higher, but that was not the case, so I stopped out here for 70-cent loss per contract, which isn't small, it's not huge either, but that's just how it goes sometimes. Okay, so I just ran you through the numbers. So my confirmations for taking this trade were the first being we increased in volume. So that's good. We increased in volume. We held value above 515. That to me was bullish. The second one was this 5 minute rally, base rally. And this third confirmation, the third confirmation was increased momentum once we broke this 515 key level. It wasn't necessarily relative strength, but we did gain momentum as we broke 514. So buyers were now interested in Netflix. So those were my three confirmations. So while this was a losing trade, just because I lost on it, it doesn't mean it's a bad trade. This still was a decent setup to take, but it didn't work out. And here's how I can avoid this trade in the future. So the first thing to keep in mind is that Netflix moved from 508.5 all the way to 518, so a $9.50 move with no real period of consolidation. Um, so you have to ask yourself, is a 5 minute period of consolidation really enough when we move up this aggressively? So that was one thing to be a little bit cautious of. But still, I mean, that's okay. I did wait for some sort of consolidation. But the next thing you need to ask yourself is what fuels these moves higher? And this is a concept I want to go over. It's kind of like the concept of steam. If we do have a pretty extended move, but we are approaching a key level, then you know a lot of traders are watching this. And if we break above it, new traders can enter, so there can be increased momentum. So key levels, areas of support and resistance can definitely fuel steam for a move higher or lower. Another thing which can fuel steam is zones. Zones are where institutions have their sell and buy imbalances placed, and usually they want orders to get filled, so they can fill their liquidity essentially because they got some of their position filled, and they want to get their other position filled at that same price or in that same zone area. So zones tend to act as magnets, which can serve as areas of liquidity. So to me, there really wasn't anything steaming this move higher. We didn't have a zone, we didn't have a key level. All we had was a pretty extended move with nothing really fueling us higher after this 515 key level break. Our 514 key level break. Once we broke this, buyers, while they were interested, there really wasn't anything fueling us higher. So yes, there were three confirmations. ES and NQ weren't really in my way, so it wasn't a bad trade. But if I'm really, really focusing on the highest quality setups, then I want to know other traders back me when I enter. I want to know if institutions want to get their liquidity filled. I want to know if traders are watching a key level or an area of importance to take it long or short. But I kind of entered in no man's land. So this was just a really, really nitpicky thing, the concept of steam, as I call it, um, areas of interest, and I really didn't have that in this trade. So it wasn't a bad setup, but I think I can avoid this in the future. And the reason I say that is last week I took a lot of trades which weren't around key levels, but they ended up working very, very nicely because zones acted as very, very good price magnets for price to eventually lead up to. I remember taking a Tesla trade to the downside. Let me see if I can find it. It's right here. You can go back to my other videos and watch, but essentially, this was a pretty extended move from the highs, but eventually, essentially, this trade worked out because we had a zone um, in this area right here. It was a demand zone um, in this area. Um, Imagine this is light green to stand as demand. But essentially, yes, we are extended, but we do have a zone for price to be attracted to because zones act as magnets. If you go to Netflix today, there really wasn't anything attracting price to. I mean, the move had already happened above 514. This is the level traders were watching, not some sort of continuation here. So yeah, I'm gonna end the video here, and hopefully I can take better trades. And nothing really happened to my account. I'm fine, but I want to see if I can make up this loss and end the week green.